Hello, viewers. You're welcome to this episode. This episode is what I titled Practicing My Own Strategy. All right, I want to show it to you guys live how I literally trade. All right, in trading, if you're still struggling, that means you are not really doing what you should be doing. Okay, so what do I mean by that? You need to stick to a particular strategy. And before you can stick to a particular strategy, you need to do enough back testing. All right, practice it on your demo account. Then you can now be confident of that particular strategy. There are so many strategies out there and they all work. Nobody will come out and say this is one strategy that is better. No, they all work. All right. So you must choose one. All right. Having chosen one, perfect it. All right. Then anytime you open a chart that you are doing your top-down analysis, you should always look for a particular setup for your strategy. All right, for your strategy. Now, what happens if you open a chart, you want to trade and you cannot find your setup, meaning that that day you are not going to trade? As simple as that. You need to be disciplined. Open your chart. Don't force a setup. When you open a chart and your setup is not there, haven't scaled from the monthly down to 1 hour, you cannot find any setup for your strategy. All right, because you have to have a checklist for your strategy. You must see this, you must see that before you apply your strategy. That is just it. So if your checklist is not met, that means that day you are not trading. Except maybe you just want to scalp. Yes, it's allowed. You can scalp as you once you see price actually going up. It's bullish, even if it's not a setup, but risk less. All right, use a proper risk management to do scalping. And scalping, you don't need to hold the trade for so long. Just 10 pips, 5 pips, you are out. Okay, because it's not your strategy. There is no setup for you. So having said that, guys, if you need one-on-one coaching, all right, please reach out to me. All right, I will simplify trading for you. You won't have to start struggling. A lot of people are struggling. You don't need to struggle. Yes, trading is a skill set and it's difficult to understand, but once you understand it, you just know that, oh, this thing is very simple. Just like when you are learning how to drive. To even go out, if you are to go out, you have any place to go, for you to carry your car out, you'll be thinking, how do I drive? Where do I park? How do I do this? But by the time you are good in driving, you cannot even go out without your car. So that is the same thing as trading. Or when you are starting a business, all right, for you to find your feet is difficult. But as soon as you are able to perfect what you are doing, you just see everything start flowing. Now, what is my strategy? My strategy is what I call smart money concept, SMC strategy. All right, smart money concept is a strategy that what does that entails? Now, we don't struggle. You do your top down analysis. Haven't done that, you look for a break of structure, the last break of structure, all right? Then you now look for that bearish order block. If the market is going up, the bearish order block that caused the break of structure, At this point now, this is the base of that block, all right, that caused this break of structure to the upside, all right. Now that the price is here, it has created a high. What do I need to do? All right, I need to wait. I've identified the origin that caused this break of structure to the upside. What I need to do is to wait, allow price to come and retest this place, to come and tap into, to come and interact with this same origin that caused the push up. Price will come back. All right, now this is the secret. Here are where the banks place their order. Now, what happens? Once the price is dropping, they push it back up. That is the secret, guys. Please, if you want to know more, contact me. Why this place is called a bearish order block? We have a bearish order block and we have a bullish order block. A bullish order block usually forms at the top or at the resistance level where price will interact to then push to the downside. All right. Then a bearish order block is the one that will form at the support level where price will in future come back to interact with, then push to the upside. What is the secret of that place? This is a place where the banks, the big boys, financial institutions, this is where they place their trade. Once they take position, as the people, the sellers are trying to push the price down, because below, if it goes below this point, they'll be out. They'll lose their money. And they don't want that. So what happens is that as price is coming down, it gets to this point, they push it back up. You understand? So that is the secret. So what is my strategy again? I will tell you guys. Price is going up. Tap, retrace, break structure up, retrace, break structure up, then retrace, break structure up. What do I need to do? I've established that this is going up. Now, the last break of structure is this. All right, this is the last break of structure. I don't need to start doing all this. This is the last break of structure. And before this last break of structure to be valid for me to refine the other block here, what will happen? All right, I will see that price is coming down like this. It created a little, one moment. I would have seen that price is coming down like this, get to this point, all right, created something like this. Then I want price to come down, tap into this place, all right, then before price action starts to push to the upside. All right, what is this? This is what? A pool of liquidity. Is a pool of liquidity, meaning that money is sitting here. There are orders here. So price action will come, clear this place, get to this point, tap into the origin and push to the upside. Now, this point here, there will be, because of this origin here, there will be what we call imbalance here. There will be an imbalance here. What is imbalance? It's a gap that price action creates when it's taken off from an origin before it breaks structure up. That swift movement that will create imbalance, all right, when the price is going up or rather when the price is coming down. So what do I need to do? I will just come, take my buy tool, place my buy limit here, and all right, target this up. As simple as that. A little below this, my little below this level for my SL on target to push the price to the upside. That is it. It's simple and straightforward. So at this point, I've identified this point. Where is my imbalance? This imbalance between here and here, you see that is all the way bullish, 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 uh, bullish candle, bullish candle, bullish candle, bullish candle. So this is what we call an imbalance. So my imbalance is identified. All right. My imbalance is identified here because market has created a gap. Because normally when price action is pushing to the upside, price will a candlestick should print and another should print by the side. There shouldn't be any gap. Like here, you can see there's a gap here. It's not supposed to be. This imbalance. Uh-huh. So you can see that even this place is a valid order block. All right, is a valid order block too, because there is an imbalance here. All right, okay. So this I've identified my imbalance. Then all I need to do, because this place here, this point here, people will look at this point to take position. This place will be identified as what? My liquidity point. As my liquidity point. So what I need to do now is wait. Let's put it in a replay mode. Let's wait and see what price action we do next. Let's wait and see what price action we do. It's coming and you can see it has taken these people out. Then if I should stop it for a while, now that price action is coming down, what I need to do is place my sell tool, then my buy tool, beg your pardon, my buy tool here, all right, a little below this level as my SL. Then I'm waiting. You can see how I do this thing, right? How I price is going up. Now it has retraced and now joined to push. Now I'm replicating this exact and the same thing here. What I now need to do is target this reversal point. This is a reversal point. Price has created a high before it started coming down. Now I will target this high. So don't be greedy, all right? What I need to do is having recognized and identify this point. This is what my liquidity point where price comes and it grabs this liquidity, these orders that are here. Remember, this place is an imbalance. This is another block, but price we use this place because of this one that is sitting below, and there are imbalances. And here also there is another block, but this price action will use this place as a liquidity to come and tap into this other block, all right, before price will then turn and start going up upside, all right. So I've identified everything. So all I need to do now that I've placed my buy limit order, I don't need to do anything. I will just wait for price, all right. Let price come and tap me in. Now we are into the trade. It has tapped me in. You see, it's going, it's going, it's going. Price is rallying up. It's going up. Let's see. You can see our TP is hit. You see, without any stress. And this thing, you don't need to be there. What you need to do is to identify the bearish order block that caused the break of structure to the upside. All right. Identify also to see if there is an imbalance that is sitting above the bearish order block. And again, confirm if there is a pool of liquidity that is sitting above that imbalance. The price will come back, clear that, use that as a liquidity, come, tap into the imbalance, from there push to tap into your other block before price will start rallying up to resume the underlying trend and break the structure high. As simple as that. Once you have identified all those things, place your pending order. If it is bullish, you place your buy limit order. Like I told us, a buy limit order is an order you place waiting for market, waiting for price action to come below the normal price, all right, before it taps you in and the price will start rising again. All right. While a sell limit order is an order that you place saying the price is too low at this point. You want the price to rise up to a certain level, tap it in before it start going down. It's very clear. You can watch this video more than once and you will understand it. Make sure you take note. All right. Watch it, like this video, share it, drop any comment that you have. All right. And if you want one-on-one coaching, please reach out to me. I will break this thing down for you guys to understand. It's as simple as that. You don't need to struggle. After I've done my analysis, I've marked all the things, identified the imbalance, the liquidity grab, and my order block. Then I'll put my pending order. I'll wait for price to come. Even if it takes 3 days, 1 week, 2 weeks, I don't bloody care. If I need any other fast money, I can do scalping. All right. But my main strategy and my trade, I've already designed everything, strategized, set my trap, and I'm waiting patiently for price to come to this point and tap me in so I can join the trade to the upside. Now, what happens if price get to this point and break below? There's no problem. Look for another opportunity. All right, and that does not mean that my strategy is not working. So, guys, stick to one strategy, and once you find your setup, don't hesitate to take action. Thank you so much, and drop your comment at the comment section. God bless you.